It is 7 o'clock. So first of all, I'd like to welcome everyone for joining us on this episode of Calm Online. We have a very special guest. His name is David Imler, and David is a mortgage agent, and he's been serving the GTA for 10 years. And he and his wife, Christine, live in Whitby, Ontario, with their 4 sons. So obviously, it is a very busy time for him right now, being at home with 4 boys and his wife. So David, welcome to the show.
Hey, Denise, thanks for having me.
I'm so glad you're here because right now, so many people are in a time of financial stress because, as they're showing us, millions of Canadians have lost their jobs or have a reduction in their hours. So they don't have that income coming in and they're stressed. So we're going to talk about strategies to help ease that burden, some no-cost ways to improve cash flow and that sort of thing. So why don't we dive right in? What are some no-cost ways that we can kind of rejig our mortgage to improve our cash flow?
Yeah, absolutely. So one way is you can re-amortize your mortgage. So that's, if you've got over 22, if it's scheduled over 22 years or 15 years left in it, however, you can spread it out to 30 if you call into the bank. And this is nothing on, this is an easy thing to do with the bank. You need to re-qualify, but there's a lot of unprecedented things happening right now. So my thoughts, if you're calling in to extend your mortgage instead of just defer it, they're going to be happy to say, okay, let's reconfigure and lower your payment. And you can get, a $300,000 mortgage moving from 22 years to 30 years, you'll save just about $300 in month-to-month payments. So that's one no-cost thing, no cost to you at all that you can do. The other thing is if you're on an accelerated program, where you have an accelerated weekly program, you can take it off accelerated, and that's a free thing that you can do when it comes to your mortgage as well.
Now, do most people know that they're on accelerated, or when you say accelerated, does that mean that they're paying 2 times a month or every 2 weeks?
So accelerated is it's you've sped up your payment. So it's typically people would sign up for like an accelerated biweekly payment. And the accelerated payment, just you pay a little bit more on every payment toward your principal balance. So by choice, when they set your mortgage up, you paying a little bit more than you needed to. So you can just revisit that. So that's one thing you can do. It's not a huge savings, but it'll save you, $100 a month, depending on the size of your mortgage.
Are mortgage lenders sort of concerned about the fact that people don't have income right now? Because I know when you go to apply for a mortgage, it's really important to have the income high, but right now, is it sort of more accepted saying, we understand that this is just an unusual circumstance?
Yeah, they're definitely concerned about income right now. I've been on quite a few calls with various VPs and CEOs of various lenders, and it's unprecedented. Everybody is trying to do their best. From the top, they've been kind of saying, empathy is they're trying to lead with empathy. They're trying to listen to scenarios and make judgment calls. And in a lot of cases, it really is like just a case by case basis that they're having to decide what they're going to do with each situation. So they genuinely are. In some situations, they have online portals and stuff where you can just some lenders, you can just fill out all the information, tell them what you need. And I guess I'm kind of jumping into deferrals there. Your question was about income. They are still concerned about income, yes. And when you're requalifying and so on, we can't assume that they're going to just, get with the times, banks lend us more money because we don't have money. In some situations, there's lots of different ways to access equity, but they're still managing their capital, which is people's retirement funds. It's the community's funds, right? And it finds a lot of seeing articles about kind of demonizing the banks a little bit, where it's like, oh, they're making money on money and taking advantage of, but they're managing people's retirement funds. It's a very human thing, and we're in a very human situation. So the best way we can approach the banks is just with that human element of recognizing that we're dealing with people on the other line that are in this together and come up with a solution. Does that make sense?
Yeah, that makes a lot of sense. So what were the first 2 things you mentioned so far? You mentioned stopping the accelerated payments. The second one was extending your mortgage. Extending your mortgage. So what are some of the other options?
So the other option, those are the 2 free options. And then if you wanted to go into like options that aren't free per se. You could refinance. So if you have equity in your home and you're still working, you can, and you have debt that you want to consolidate, you can just do a traditional refinance where you move everything into your mortgage. You can save significant amount of money just by and headache just by simplifying things, And there are options as well. The costs on those, if you do it with a bank, we do it with a lender, or we call them A-lenders or traditional lender, is around $800 to $1,500 in legal costs. Oftentimes we can get those offset by the institution we're moving your mortgage to. So your bank will offset those too if you do it with them. And then there are options that are not bank centered, they're not with the banks, that are equity based. So you could borrow a mortgage and prepay it for a year, and you just access quick equity as a second mortgage. A lot of people don't like that, but we don't necessarily like financial pressure either. And these are a great tool for seeing through for a time.
So when you're talking about the second mortgage, you say a lot of people don't like it. What are some of the reasons they don't like it? Is it because they don't want to have that extra debt?
Yeah, I think in some cases, like, we want the mortgage gone, right? We want to be debt free as soon as we can. That's the goal. But sometimes we have to use leverage, and I think there's a little bit of a stigma. People like to say I'm mortgage free, but they don't necessarily like to say I still have a mortgage, or I have $500,000 mortgage, or I have a second mortgage. Like, there's a little bit of a stigma with it. But at the end of the day, it's just a tool to leverage, and sometimes a very effective one. So that comes with a cost as well.
Well, the refinancing that you had mentioned, I had said that there was a lady who reached out to me before I did the morning show, and she said what she was really frightened of was that she was concerned, do I pay for my mortgage or do I pay for food? And so I had suggested, because of you, about refinancing. So she said she refinanced, and because the rates are so good right now, it didn't actually add any years to her mortgage. So what are the rates looking like right now?
So rates range this is a big conversation, because you'll see, or not a big conversation, but it's a complicated one, because you'll see what's advertised online, at the 2.39 or the 2.2. There's different, and the lower rates that you'll see are for purchases and for insured purchases, which means you're putting 5 or 10 or 15% down. If you're doing a refinance, they're typically in the 2.89 to 3.19, depending on which lender. Still, below 3%, still a great rate. But they're not as low as you might think right now. The rates in the last, I think, 4 to 5 weeks, or let's say 6 weeks, I've seen the rates move more than I've ever seen them move, as far as just they're up and down. They usually went really low, and then they've kind of spiked up again. And anyway, but I think around the 3% range is a safe bet in planning. But
what if you did defer? Like right now, most of the many, I don't know if it's many or most of the financial institutions are allowing people to defer their mortgage. So if you defer your mortgage, what do you have to do? Do you have to sort of speed it up and pay it to catch up within 3 months, or do they add it on to the back end of your mortgage? How does that work?
Yeah, so that's a great question. Every lender has different policies. The kind of the banks and kind of what they're doing is they're taking the 3 to 6 months, whatever they offer you, and they're putting it on the back end. And they're still asking you to pay your property taxes for those 6 months. So they'll still take, if they're taking $150, $300 a month for your property taxes, they'll still take that out for the 6 months. But then they put it on the back end of the mortgage. Some of them will take the interest portion and they'll put it into your payments for the remainder of the term. But it varies from lender to lender. Does that make sense?
So we'll have a question that says, how can we protect our credit? So there's actually two. How can we protect our credit? And talk to us about mortgage insurance. Is this recommended? So there's mortgage insurance and protecting our credit. Mortgage insurance and protecting your credit. So protecting your credit, when you're now, in general, the basics of credit are make sure to make your minimum payment, obviously. Yeah. Always, so that's one thing you want to make sure. There's different services that you can get, like Credit Karma
different services like that that will let you monitor it. RBC has credit protection programs as well, like different. But if you're talking about protecting it when it comes to deferrals, is that the nature of the question? I'm not sure.
I think it's just protecting it in general during this time. So
Yeah.
what are the things we need to make sure that we do so that, let's say that we want to come to you, maybe it's a first-time home buyer or somebody that does need to get a second mortgage, we need to come with a good credit rating. So what can we do to have that credit rating high?
Okay, so yeah, the basics of credit are, when you're buying a house or getting ready to buy a house, is 2 years active credit, two trade lines, which trade lines are your credit cards, credit lines, car loans, student loans. So having 2 years of good history where the payments are made. It doesn't necessarily, maintaining credit isn't necessarily about, running up your balance and then paying it off. It's about just being faithful with the little things every month, making it on time consistently. In this time, and so when it comes to buying a house, you have to have two lines open, 2 years of good history, and keeping those balances below 50% is key to having good credit. So because the high balances will weigh down your credit.
Because I was wondering, Dave, so the banks right now are sending me messages all the time. My particular bank will say, you've just recently been pre-approved for a $12,000 credit card. And I didn't take that on. I thought that would affect my credit rating if it was a pre-approved. If it shows that I have $12,000 of available credit, even if I'm not using it, does that negatively impact my credit score?
No, it doesn't negatively impact. It only starts to negatively impact if you have a balance that's over 50%, or if you're carrying too much of a balance, or if you're having a balance and you're not making the payments. But if you just have a $12,000 card, a $10,000 card, a $30,000 line of credit, and they're just sitting there, that bolsters your credit. It's good for your credit to have it show. Yeah.
That's good.
So yeah, so it's a good thing. I think one thing, we were talking about this earlier, Denise, when you and I were chatting. I had an old guy in Texas say to me one time, we were driving around and talking about business, and I was looking at some options for business down there. And he said, well, cash is king and credit is queen. And in these times here where cash is starting to get a little sparse and uncertain for some folks, we can start to wonder, okay, do I buy groceries? Do I pay the bills? Obviously, we buy groceries, we provide for the family. But that queen aspect of credit is important to keep the queen happy. And so I've learned around my house since being married that one of the ways to keep the queen happy is to communicate. And so communication is going to be key if cash needs to be prioritized. Now, this is not talking about buying a house. This is just talking about prices. If we have to conserve cash, then if credit is going to be missed, we can speak with the banks and take advantage of these programs and so on.
That's so important that you said about communication. We need to communicate. If you're going to miss a payment, so they say that you can defer a payment, but you need to make sure that you're talking to the bank to let them know that's what your intention is. And even with your credit cards, you need to let them know this is my intention. Is that right?
Yeah, absolutely. When we get overwhelmed by, we've got the COVID, job losses, all the political, all the news coming at us, it's every day there's different things, and it can be overwhelming because we want to be like the ostrich and just stick our head in the sand and be like, everybody's credit's going to pits. But no, not everybody's credit is going to pits. The majority of people I shouldn't say the majority of people are making their payments, but the numbers are, people will fight. They understand how it works. And I had a situation where I lost everything in a business move, and it was right around the Great Recession of 2008.
Yeah.
And I didn't maintain my credit as a young man, and it took me somewhere between probably 3 and 5 years to really get back on my feet and get my credit in a good spot again. So, and I didn't communicate, and that was my mistake, because it's a human relationship. At the end of the day, we can treat it like it's in a number of ways. We can objectify it, but it's an agreement that we've made, and if we make a phone call, we'll receive a human on the other side when we're not at the collection side of things. because when it gets to collectors, it becomes a little less humane.
And you know what? I'm glad that you're
Don't tell me.
mentioning the human element, because there's a lot of people out there who have lost their jobs and they feel that pressure of that they're letting their families down. And you had just mentioned that you went through it in the recession of 2009 and had trouble then. I too experienced a great deal of financial trouble in 2009, and I learned a lot from that experience. And because I learned a lot from that, I was able to deal with this recession better. And so if people are listening and watching at home and you're thinking, oh no, I didn't position myself well right now in this crisis, you know what I'm telling you, you're going to come out stronger on the other side and learn from it. So please be easy on yourself and give yourself some grace. I mean, look at Dave and I both have been through this and come out the other side, and now we're stronger. And what I was saying before to people, I kept saying there's going to be a market correction. And particularly some of my real estate friends were saying, no, the market in Vancouver's doing well. This market's doing well. And I said, but in all of the history ever of markets, it always has a dip. Every 7 to 12 years, there is some sort of recession. We just didn't know where it was going to come from, or we couldn't figure out how on earth this one was going to hit. But oh boy, it did hit. And Dave, one of the things that I want to talk about is a window of opportunity. So what was happening, you know, both of my daughters recently got married and they're renting. The housing market was so high that these young people weren't really in a position to be able to get in. So really tiny places in Durham region were selling for $750,000, townhouses in North Oshawa. And so do you think that there'll be a window of opportunity where first-time homebuyers, if they get prepared, they might be able to get into the housing market?
I think so. I do think there will be a window to buy where it will be lower. Like we're already seeing prices have eased a little bit. Activity has slowed right down. Where it will be tricky because I think it'll be pretty brief, simply because of the demand. But we'll see. There should be a surge of supply, and so we'll see how. I'm not sure. I've heard different opinions as to where it will be. Yes, there will definitely be an opportunity to buy at lower prices. How drastic that will be, I don't know. I don't think it will be a crash per se, or as steep as we think, or I don't know exactly. I've heard different opinions. But yes, you're right. There will be an opportunity to buy. The $750,000 townhome will not happen. You know, it'll be like the stuff similar to what we experienced in 2017. Like we had a spike in 2017, and we had a crash in 2017 that where prices fell significantly. You know, where people were paying significantly more than they needed to pay for houses. And then come summer, prices were significantly lower. And so I think we'll see a surge in supply. And for a season, I don't know what the timeline will be, but yes, it'll be a good time to buy. So
what should first-time home buyers do then to prepare?
I think get pre-approved. So like, you know, whether it's me or another institution, you know, find out what you qualify for buying. And make sure that you've actually got somebody that's looked at your documentation, looked at your down payment, looked at the various things to make sure that you're actually ready to go, so that when it comes, you're ready to pull the trigger. And definitely a part of that process is getting pre-approved, getting the right realtor in play, so that you're ready when the floodgates open, you know, to kind of jump in there and buy property.
I like that, because it is true that in adversity, there's a seed of opportunity. So if we keep focused on the opportunity in this storm, I think it'll help get us through.
Yeah, absolutely. Absolutely. You can see it. I thought of it the other day when I was talking to the boys. I said, you can either see it as the sky is falling, or the sky is calling. You know, it's everything's falling apart, or we're retooling and getting ready because there's greater purpose, greater opportunity, and the opportunity to become better. I was one quick thought. You didn't ask this question, but it's often occurred to me in my industry. You hear often people saying, you know, that your house is your biggest asset, or the biggest purchase you'll ever make. And knowing the numbers and seeing what you pay interest over the time, and owning a house myself, and knowing how many times, whether it's the furnace or the washer or the roof, or, you know, the amount of things that you put into, I thought, you know, if an asset is defined as something that puts money into your pocket, and a liability, something that takes out. Like the house grows in value, but it takes a lot of money out of my pocket, and which I'm grateful for the house, no doubt. But I tell my first time home buyers and various people and friends and so on, the greatest asset that I have is me. Because I'm putting the most money in my most money in my household, and just for all of us as individuals, the greatest asset we have through all of us, we can lose it all, but if we still have our breath, if we still have our strength, if we still have our ability to learn and grow, we can really make the most of this time by just saying, okay, what can I learn and how can I grow and how can I help and serve, and it's a
Oh, that's such a peaceful thought. When you just said that, just this peace came right over me. That's
awesome.
It's gorgeous. I love that. So
Awesome.
we have another question. Should we cut up the credit cards and go back to cash for purchases if we don't the money, we don't buy it? I don't understand that last bit, but I think we need to keep the credit cards because a lot of places don't want to take the cash right now. They don't want to have a transaction with the possible virus transmission.
Yeah, I think generally, if you don't need it, then you don't buy it.
Yeah.
You know what I mean? Like this is the time where the stuff that's getting bought is groceries, and the basic necessities. The economy's shut right down, and so it's just essentials only. I would definitely not cut up access to credit right now, because like you might need it at some point. So
yeah, that's good. Did you hear that? Don't cut up your credit cards.
No, don't, no, yeah, and truthfully, you shouldn't be exchanging cash too much because you don't know who's touched it and where it's been. But
and like you had said, it's important to use those credit cards. You know how we talked about you have the credit cards, but it doesn't matter if you have 12,000 as long as you don't have 50% or more owing. I heard that you should be spending on your credit card and allowing that to show up on your statement each month and then pay it off, because if it keeps showing up as zero, it doesn't look like an active loan. Is that right?
Yeah, if you're using it, it does show up. It adds to the algorithm if you're using it. So some people, when they're rebuilding their credit, we recommend they get, if you don't have credit, sometimes banks won't give you credit, so you can go to like a Capital One and do like a secured card. And so when people are rebuilding their credit, we say, get the secured card and just have your cell phone paid on it every month, and then just pay it off, And so if you don't trust yourself with credit, that's one way to do it. And then to spend on credit regularly and clear it off, it's a great way too, if you can trust yourself to pay it all off. And
Dave, have you been hearing any heartwarming stories in terms of people helping each other financially during this time? I heard one where someone wasn't able to pay their rent and he was feeling really stressed and he needed to tell his landlord that he couldn't afford the rent. And he said he finally got up. This is all on Facebook that I read this. He said he finally got up the courage, and his landlord said to him, "Didn't you get my email?" And he said, "What email?" And he said, "Oh, I said you don't have to pay rent this month." And I thought, wow, the goodness of people is incredible.
Yeah. I would love to say that I have heard some. We deal with a lot of, I deal with a lot of clients and so on. So on the bank side, I've been refreshed to hear how quickly banks have been willing to defer. And then we've got private investors that have private mortgages invested that have been gracious to defer as well. And so I'm dealing with quite a few of those situations where people are calling in and saying they can't pay the mortgage. And so we've had numbers of good stories like that where people have been kind, and it's nice to hear that. I know I don't know if he's sharing it. Well, I think he's sharing it. Justin, our CrossFit coach, Justin, gave the entire gym April free membership, and I don't know if I should be broadcasting that or not, but he was really gracious. I actually called him and said, "You can't do that. You can't do that for don't but don't do that for me. I'm okay right now." But so there's been some really I think that Justin's move was probably the kindest move I've seen. I've seen comped an entire gym, the membership.
So I don't see that we have any more questions, but if we left on one final note, if somebody was sitting at home and they're not sleeping and they're very stressed and they think, "Oh no, my credit cards are too high, I don't know about paying my mortgage," what would your number one suggestion be?
So my number one suggestion, I guess, would be twofold. I love your calm analogy. And there's certain things that we can act on and certain things that we can't. And so we can't dwell in what we can't control. We are where we are, and I think a lot of times we can derive self-worth from net worth, and or negative net worth. And I don't, and then we can compare ourselves to where we think others are at. And I've never found that stable ground to stand on when you're anxious about where you are or where you aren't compared to others or compared to where I wish I was. You only have power to act right here where you are. And so acknowledging like this is where we are as a society. And that's one of the things when everything first started going down, I was in Florida with the family on a pre-planned trip with my family down there. And I kind of, because I'm in the finance world and because I deal with people's incomes and financial situations all day long, as soon as I heard what was going on and could feel kind of the ramifications of this, anxiety in me just spiked for my own situation and for just knowing what this is going to mean for everybody. And I really had to take a moment and say, and I have lost it all before. And at the bottom, my wife Christine said to me when we were, I wasn't sure how we were going to get back on our feet. She just said, "Dave, we've got everything money can't buy." And I think when you can be content in the moment and rest in, I'm not the person, I'm not the money in the bank, and I'm not what I owe. I am a person who's capable of being kind, capable of loving, capable of breathing and contributing today. And so this is a long way about saying I decided in that moment when I got stressed about this crisis, I hope it's okay to say I follow Jesus, the teachings of Jesus, and one came to mind, and he said, "Don't worry about tomorrow; it'll take care of itself. Just live today." And so in living today, I'm not going to forget about all my obligations. I'm gonna communicate with creditors. I can't make this right now. I need a deferral. I'm going to do the things I need to do that way. But I'm not going to worry about today. I'm not going to worry about the money that I lose in the stock market or that I might lose in my house or all these things. I'm just going to focus right here today to be kind to myself and to others. I'm going to love and focus on giving to others, because sometimes when things start to get unsure, we start to get into self-preservation mode. And for me, self-preservation mode always makes for more troubles when it comes to relationships and for my own personal health internally. But when I just focus on giving to others and being available to my kids and just spending time, sometimes you feel like you're being irresponsible if you do that, but just contributing to others and being available, even though you don't necessarily have all the answers, And so I'd say, be kind to yourself, look to where you can help, and communicate with the people you owe money to that you're in a jam, you want to pay, but you need a deferral, and then also seek counsel. I mean, like I'm here. You don't need to. If I can be of any help, I'm happy to book a 15 or 30-minute call with you and just kind of go over your situation and give you any kind of counsel that I can give free of charge. There's no obligation to do business with me or anything like that. Or seek counsel from other people that you know. I think sometimes part of communication is we're willing to let the bank know that we can't pay, but we don't necessarily want to let our friends know. And some friends you shouldn't let them know because they'll be judgmental. But sometimes just seek out an ear where you say, like, look, I'm in a real jam here. It'll do your soul immense good just to realize that someone else can say to you, me too.
Absolutely. That was beautiful. That was fabulous advice. Oh my gosh, it brought tears to my eyes. Oh, Dave, you are amazing. So before we end at 7:29, that went really fast. Before we wrap up, can you just once again let people know the best way to reach out to you?
Yeah. So info@davidimler.com. My cell phone is 905-999-8138. I'll put them both in the chat here. And I'm going to watch a Marvel movie now with the boys, so I won't be available this evening. But definitely here to help if I can in any way.
Thank you so much for spending your time. And this will be up on